Let's
All
go with
right, team.
Roggy.
You know what time it is. It's Roggy time. Smash the like. Let's get it started. Roggy Horner, Managing Director of Futures at Simpler Trading. Welcome back.
Hey, how are you? Good morning. Great to be back.
Good morning.
Pretty enthusiastic introduction for you. We always enjoy having you on. Just, broad market talk here yesterday. New low for the move. Nice rebound. We're looking okay today. I know you take a little bit of a bullish slant on this market. What's your key for today? I'm just talking about not individual stocks, but like the S&Ps, the broad market, no real catalyst out there. What are you keying on?
Three things I want to constantly take the pulse of. So we can see the S&P put in a little minor low pattern. We're taking out the high on the S&P futures. So yeah, you're right. Nice little crawl to the upside. It's a bullish pattern. I think the main thing that I've been focusing on when I look at my notes at the end of the day, time frame. What is my time frame? What is my time horizon? And I don't know that I want a really long time horizon at the moment, but I don't know that right now day trading is what I want to do either. So I'm finding myself somewhere in the middle, looking at 1 hour, maybe daily time frames, and I'm looking for maybe a few days of follow through. So just to kind of set the stage, the main two things that have happened this week, the Fed target rate probabilities. We are going back and forth between, are they going to hike to 5.25 to 5.5, or are they going to hike to 5.5 to 5.75? Now, obviously, that second choice is bearish for the market. And this isn't about what they should do. It's what is priced in. So every time we go back and forth between those two, and by the way, you can see this, everyone can see this really easy. Google CME Fed Watch tool, and it's this nice little graph. And when we start inching back towards 5.25 to 5.5, or even less, equities go up, bond yields go down, dollar goes down, and all those nice juicy things that we like start falling back into place for the upside.
You're a big fan of watching the bonds to get your equity indicator then, right, Roggy?
I am. Bonds, I absolutely am. Bonds and Fed fund futures will usually give us a pretty good idea of what yields are doing to equities. We notice bonds are bouncing today, right? We had 3 or 4 down days, down sessions in the long bond. We're up today, and shocking, equities are up. So you're absolutely right.
It's funny because if you go back historically, a lot of times bonds are inversely correlated with equities, but that's not the case here right now. And that's maybe because we're so dependent on rates here as you start to see the TLT, and I always look to the TLT just because it's easy and it's widely traded. There's been this positive correlation here in the last 6 months to a year. Do you see us eventually breaking that, or is it we're so reliant on the Fed here that we're just going to continue to track the bonds?
If we look at everything pre-2008 and after 2008, we are modern monetary policy junkies. And so you're absolutely right. We've been at this for so long, we start remembering things that
long time ago.
Right, pre-MMT, and now, equities love cheap money. So I'm just going to follow. What are those signs of cheap money? I want to see weak dollar, which is very much in line with a lower yield, whether that be the central bank rate, whether that be the long bond, whether that be notes. I think the market needs, not just loves, needs cheap money.
And it's such a great point because if I look at the day the TLT topped out was February the 2nd, and then we went down for 3 days straight, and the equities completely ignored it for about a week. But eventually, it started to leak. As the TLT continued to break down, the equities eventually started to follow. So it gave you literally a week lead time here saying, hey, we're sitting up here near the highs, but there's something else happening here under the hood. And that's that, the TLT is going down. And, this is not good news for equities here. So, and again, I don't think it's a coincidence either that, we show a little bit of strength here and the TLT is starting to show some strength as well. So I love this indicator, Roggy. That's why we bring people like you on who are who've been trading for a long time and look for us to give us an edge. That's what trading is all about, is trying to find an edge. I've used that for a long time too. What other edges do you look at? So besides just bonds, and looking at the yields and looking at the Fed tools, what other edges do you look at to try to give you a market feel?
The other really, and you're too kind. I think that we kind of stumble into this because so much of this is on the job training, right? You and I stare at this stuff long enough, we start
Yeah.
to see the patterns, right?
Yeah.
So I
Pattern
think
recognition.
exactly. And I think then, as you and I can then share with other people, this is what we noticed. So you don't have to spend 30 years. That's the fun part of this, right? But the other thing that I love is the dollar. We got to talk about the dollar anytime we know the central banks are in play, and dollar is such a great way to understand it, such a great barometer. But the dollar index futures or UUP or DXY, they are the basket. All right. So we have euro, we have yen, we have pound, and then some fairy dusting of total of 6 currencies. The best way that I know to understand what the dollar is doing, the best way I know is to look at the 6E futures. Now, whether or not someone wants to be a futures trader, 6E is such a great way to say this is 58% of the dollar index basket, which is obviously a high concentration weighted basket. Euro goes up, dollar goes down, one zigs, one zags. And every morning I want to see if we're going to see good risk appetite, like you said, that bond, and I want to see euro up. And for those of you that are just getting used to looking at bonds, it's an inverse to yields, right? So TLT, like Dennis was talking about, ZB, then I'll look at the futures. When they're heading down, yields are heading up.
Yes.
And when they're heading up, yields are heading down. So I want to see also euro heading up, and that means dollars heading down. We start seeing those pieces in place. That's when longer term follow through becomes, for me, more realistic.
Dennis, I think you'll get a kick out of this, and Raghi, I'm not sure if you go back this far, but when I used to be a clerk in the S&P 500 pit, the bonds opened up before the S&Ps did, and all the people on the desk would be, "What's the call? Where we're going to open?" This is pre-Globex, and I'd look up at the bonds, and if the bonds were up 4 ticks, I'd be like, "We're up a point." If the bonds were up 8 ticks, I go, "We're up 2 points."
Huh.
If the bonds are down 4 ticks, we're probably down. If the bonds were flat, we're like, "Oh, we're flat open." And that was like, that was before you had all the free flow of for information. And of course, Globex trading starting actually started on my oldest daughter's exact birthday, June 25, 1992. So a little bit different. S&P sneaking up to the highs of the session here. Raghi, what about the rotation that's going on? I mean, what are you seeing from the rotation? We've had, the healthcare stocks, some of these value stocks, primarily healthcare. You combing the ditches here in any of these stocks, Johnson and Johnson, or any of these ones that have really had a haircut in 2023?
So when I think about S&P, and if the S&P is going to have some legs, obviously XLK, tech's got to move higher. Financials have got to move higher, in healthcare. Healthcare has been kicking my butt on and off. I can't say I look back at the last year or 6 months and say I've got a really great pulse on healthcare. It's going to happen. I don't have a great pulse there, but financials have been looking really good. So if I know financials are looking good, that's number 2 weighted in the S&P. That's number 1 weighted in the Dow. That gives me a better idea of where to look. So healthcare, I think Pfizer has been on my radar for a bit. Johnson & Johnson's been a little bit of a dumpster fire. I think they've got their own issues going
Look at
on.
that thing.
I was looking at Johnson & Johnson just yesterday, and I'm like, wow, this thing. And I do believe that there is this trade, and I talked about it with a guest yesterday with Mark Chaikin. I don't know if it was Mark, it was somebody else. Maybe it was Mark. But I do believe that the reason you're seeing a lot of these consumer staples starting to dump is that people are moving into cash. So like I've said for a while, I mean, it's one thing, Apple, but you've got growth potential. When you're entering a Johnson & Johnson, you're entering a Procter & Gamble, you're entering a Coke, you're looking for earnings stability and you're looking for yield. But as the yield continues to climb, the cash yield, the treasury yield, that becomes competition for stocks like Johnson & Johnson. That becomes competition for stocks, like the consumer staples. That becomes competition for the utilities. And I do believe that competition is showing up, and we're starting to see those stocks show weakness just directly because yields are going higher. What are your thoughts on that, Raghi?
I think when I look at the weighting, and absolutely everything is a competition for our dollars. So
yes.
Sometimes I'll see the optimism, the risk appetite move to tech, because that's just where we start seeing people feel confident about, I want to get back into aggressive positions. When I look at XLV, when I look at healthcare, I think my issue is if UNH was making lower lows with Johnson & Johnson, I'd say, all right, I've got something to be concerned about. I think Johnson & Johnson's got a narrative of its own right now, maybe around the lawsuits, which seems to be just an ongoing saga. But
Forever.
UNH is holding its own. That's where I for one, just am not right now at one with healthcare. So that's why I've been focusing on financials and looking at XLF.
All right, I want to ask a little bit about something that hasn't been talked about lately. Of course, there was a talk last year all about the grains and wheat. It seems like that chart has really come down here. What do you think about wheat overall and maybe some of the grains?
And I'm just pulling it up right now, taking a look. I'll tell you what, I have not been looking at softs and grains once the whole narrative around Ukraine started becoming something that was far more difficult to manage risk within. All I can say is once we started breaking below that 200, for me, one of the easiest places to figure out where I want to stand is price on the daily time frame above or below a 200 exponential moving average. That to me is the equator. Bullish hemisphere above it, bearish hemisphere below it. We struggled with that October, November. Once price actually dove below that in early November, I've got to be bearish.
We'll keep an eye out on that. It's been a tough situation, definitely, and I can say it to all the natural gas traders out there. They've been trying to call the bottom on that one, and they don't call Boyle the widowmaker for no reason, right? I mean, it's a tough one.
Natty gas is a really interesting story. I'm so glad you brought it up because when I look at Natty and we take a look at, say, a 10-year seasonal detrended and corrected, right? It's a double bottom towards the end of February. So towards the end of February, if I'm looking for that seasonal to kick in, as it typically does going into summer, and the last week of February is usually when we should start seeing a little bit more traction. And when I look at the daily time frame, the downtrend was broken really this week, finally. And so at least now I can go from lower low probability to now we're looking a little bit at bearish chop. But this lined up really nice with that double bottom and that lower low hitting in February. And then if the seasonals are spot on, it should be a climb from here on out.
At least you have a reference point, right? You know where you're wrong. And I mean, this little thing is pretty volatile, but it's had a couple up days and a pause. We were talking about this one yesterday. Well, Raghee, any final comments for today?
I love that we're just kind of crossing all sorts of markets, wheat and natty. And I love what Dennis is saying about healthcare and the competition. That's such an important thing. Where is money going to go looking for a return? And sometimes it's just going to be hiding out, and other times it's going to be like Dennis said, going in cash. I think at some point, if yields can continue to drop as TLT, as ZB climbs, I'm going to continue to remain bullish. And then, keep an eye on that 200 on any symbol. If we can get above that, Tesla's at an interesting point, sitting with 200 overhead, and we can see how much trouble it's had. So that 200 has really been helpful for me these last few months.
A quick one right here. What do you feel about golden crosses? Because we had a recent one, right? I mean, you're mentioning the 200 here. What do you feel about golden crosses? Do you feel that they hold? How do you use them?
I'm less interested in two moving averages doing the tango than I am price getting above a certain moving average. So if it's an incremental price above 20, price above 50, price above 100, price above 2, all I know about that 200 is people who would never consider themselves chartists are always keenly aware where price is relating to that. So I want to see price and the moving average interact. But then you're right. Is that going to also accompany the 50 crossing up and down? The 20? Yeah, of course, at some point. But it lags a little bit, so I usually don't use it.
Love it. Love it there. You guys keep up with everything Raghee does. You guys can check her out on Twitter. She has a great following. We'll see you next time. Take care.
Thank you. Thank you.
All right, let's go ahead. Let's take a little peek. What are we looking at, Joel? How are we looking in the
future? We made a new high. We made a new high for the session, 06.25. This was the area of Tuesday's high. Weekly swing number right here too. So the bulls are doing the work. Little pullback that we